Hi traders, this is Brad Gilbert with the FX Market Insight for the 31st of January. All right, new month just around the corner. But to finish off, we have the Fed. Now, one of the key parts, just having a look at the news first, a little bit of a change of the process. But just having a look here, obviously the dollar extends losses, struggles to shake off Fed's patient stance. This was in their statement, reiterated in the press conference. So Jerome Powell has just basically come out and said, look, we're on hold. We're just going to see how things pan out. It's a massive common sense call. And in fact, the Fed has already said this before. But the market's got a little bit carried away with the talk that they may adjust the balance sheet if they need to get things moving again. Just like basically reassure everyone that, rates aren't going down, but they're ready to stimulate if they need to. And we're just going to wait and see how things pan out. So that's the way the Fed's gone, right? And I think it's a slight overreaction on some of the currencies. It's good to have some US dollar direction. I think, if anything, the sign of the move, I think everyone's just happy to have some sort of US dollar direction, even if it's only short term. Now, don't forget, this picture, this US dollar weakness at the moment could change if the US numbers start to come in strong, right? They are basically waiting and seeing what comes out. And that's a really good thing for us to work with. The rest of the news, well, it's just all running off the back of the Fed, Brexit, the Fed, that's all sort of it. Okay, so when you come back to the charts, so there's a bit of work to do on your actual charts themselves with a lot of levels blown out, which is good, okay? So just coming back to the major charts, just give you a bit of run through now. We've got the Aussie. We had some slightly stronger CPI numbers. Now, the Aussie sort of popped up about 20 or 30 points. It just sat there, right? It didn't want to really go too high until the Fed, and then it's sort of reacted after that. Kiwis popped higher, obviously. I mean, all the currencies have reacted to the US dollar weakness on the back of the Fed. But to me, as I said, the US dollar's still got the strongest economy. It's a matter of where the other economies are coming from. Now, Brexit, it has sort of gone up, but overall it's still sideways short term. But long term, it's still going upwards. And dollar CAD, it liked the downside as well with that. And it also goes with that rise in oil. So two good positive factors there for CAD. So what this does is it gives us a lot of potential trading opportunities all of a sudden. Now, we've been sitting here for a week or so just waiting for these numbers to drop or a penny to drop to give us direction. Now we need to clean up our charts. Now, just having a look at the Aussie now, I can clean up that sort of interim level. I've got this level here at the top. You can see how the market is sort of gravitating towards it. Now, the Aussie has rallied 150 points in the last couple of days. This is like a big barroom brawl that is sort of brewing at the moment, where traders are trying to work out, do we really buy this? Is this a real strong move or not? To me, this shows us that the trend line is obviously reacting, but traders aren't hugely confident yet. They're looking for the final push to get the Aussie back up towards 75. But that's how our technicals look at the moment. Not a lot to do with the Kiwi at this stage, the flightless bird. Now, a lot of people have asked me about that. Little Kiwi bird only has tiny little wings, doesn't fly. So that's where we get that one in. But if you have a look at the longer term picture here, that break of sort of 68, 65, okay, we're 30 points above that at the moment, just testing 69.20. You know what? The Kiwi's got a lot of room to move on the top side. And your technical picture shouldn't look any different to this at that point. Now, dollar yen, well, short term, it's reacted to the downside. Still medium and longer term, it hasn't really done a hell of a lot, to be honest. I mean, it has come off like 100 points, but look at this technical picture. You've got this crazy low from the glitch on the 2nd of January to where we are at the moment. So to me, it's pretty much in no man's land. You really have to go back towards the daily charts to try and work out what's going on. And it's not much of it's not a clear picture. Okay, it's pretty horrible, to be honest. If you're a technical trader and looking at dollar yen, you're probably scratching your head like, yeah, I can see it's gone down and stalled like all these other currencies, but it's not doing much else for us. Now, euro, I'm just coming across here now. This old previous resistance, I just wanted to see where that was. That's completely irrelevant to me now. If anything, I'm drawing a new support line. Now, euro, I think, provides us with a much better opportunity. Now, the hard thing to swallow here with the euro is it's the backdrop that Draghi's painted, right? He told us last week that euro growth was falling and all this other stuff. So the rest of the moves has been the reaction to Trump, okay, open the US government. This is the Fed, Okay, this is the fundamentals in action on your charts. So, yeah, what's the picture in Europe like? Well, it's a little bit dovish to me. And now we've got a dovish Fed. So where does the euro go? Well, it's stalled here. It's one of the only pairs that hasn't really gone on with it. Obviously, there's a resistance line around 115. I was going to say, like, you'd think, okay, this is in with the chance to go to the top side. What we need is a fundamental driver to give the euro a push, at least through this level. And funnily enough, if you have a look at your upcoming data, we have German retail sales figures out today, right? They're expecting minus 0.6. If this number comes in strong, well, to me, maybe it's a short-term trade because of what Draghi said last week, but euro should pop above, just coming back to the chart, above 115, and that should give us a bit of a trading opportunity here on euro, looking for that move to the top side. Now, funnily enough, I'll just come across and I'll show you the dollar index as well. It looks like it's primed to move at the same time as the euro. Now, sterling, okay, just to get through the technicals and the majors here. Okay, we've got that new low. If anything, I'm just dragging that newer low across to where the low is. You're just modifying that to know where that sort of entry level is. And that's all we've sort of pretty much got at the moment. So, but don't forget, sterling and Brexit, it is way too hard to gauge what the hell is going on there. Whereas dollar CAD, okay, it doesn't quite fit the complete perfect picture. The Canadian fundamentals, if you've been paying attention the last week or two, have been weak, which suggests a higher dollar CAD. Now, oil, which is at the moment seems to be stronger than the current Canadian fundamentals, is going up. Now, on my chart, there's an arrow going down. That's because I have the oil price inverted, so it makes sense with the way the currency is quoted. Now, we've got weaker dollar, we've got weaker oil. This suggests a lower dollar CAD. So downside for me in dollar CAD, if anything, looking to sell rallies at this point until we get some more Canadian data. All right, so that's where we are with the major currency pairs. We have some sort of direction. Now, if I bring you across, let me just come back across to the US dollar index. Now, this is where the picture gets a little bit interesting because, you know, the euro is 50 or 57.8%, I think it is, of the dollar index basket. Dollar index has dropped down, obviously, after the Fed. It's touched this major level. Now, if I blow this up, like, it's no surprise where it stopped. It's actually stopped, well, right on resistance. If I get the right button there. Oh, wrong one. Right on resistance. And this goes back to the low here, just around 93.80. So you can see sort of 1, 2, you got the third touch here. It's come up to the fourth touch. The market has respected that trend line quite nicely, and it gives us a bit of structure and something to trade with. So once again, if we had US numbers coming out, any sort of weak numbers here would be a great opportunity to get into the dollar index. Or we know that the euro is, say, 58% of the basket. Euro's at a resistance level. Weak US numbers, euro rallies. This could be the catalyst for a move in the euro above 115 as well. So if I blow that back up to where we currently are, you can tune this up. You've also got the new resistance line forming with that high just before the Fed. Now, if I shrink that up a bit, give us a bit more structure, a bit more price action, you can start to see, okay, overall, yeah, the dollar is going down. It has broken down through this short-term support level. Okay, it's hacked straight through there. We're at a bit of a longer-term, excuse me, a bit of a longer-term one, but it does look for all money like it's going to go lower. As I said, the market has been gagging for direction here on the US dollar. We've finally got some, so you'd expect them to get involved, although, as I mentioned at the start, we still don't have the economic picture. So the Fed, all they've done is come out and reiterate exactly what they were talking about the last two meetings, I think it has been. That's been their whole sentiment. So with that, yeah, they've reiterated because that's all they could do. Now, if the data comes in strong and say inflation comes out strong or whatever it is, they'll be like, hey guys, yeah, we're going to be patient, but this thing's still moving, right? So you've got to be careful with what is coming out. Now, something wrong with my countdown calendar there. So let me just come back and just sort of go over the core aspects of the majors. Now, this is where trading gets interesting, right? Now, I know trading of late has been a bit sporadic, no US dollar direction, sterling all over the place, little bits of data here coming in and play. So to me, I'll be jumping into some of these trades, but with probably a smaller trade size, until I'm confident that the market is actually doing what it's doing. There are still geopolitical events dominating, right? The Fed has given the dollar direction and a lot of these majors, but there's the US-China situation, trade issue. There's the US government shutdown scenario, which is still sort of brewing in the back end. There's Brexit. Okay, we've got this crap still hanging around. So what we need to do is focus on the pairs that do have direction. Dollar CAD, right? Match this up with what's coming out. We've got Canadian GDP figures. Perfect, right? All we need is strong numbers. The dollar CAD is heading to the downside. Stronger numbers here, and dollar CAD should run to the downside. As I said, dollar index, a move down through that support line should give us a move on the dollar index, and also the euro. Now, as I said, the euro, yeah, it's got short-term direction topside, but medium to long-term, it still doesn't have that clear direction. If it breaks above 115, I think euro will go into a slightly upward trend for the moment, despite Draghi's comments that growth is dropping in Europe at the moment. Out of the other ones, it's the one out of whack. So you look at the sterling, technically it's going higher. Brexit, obviously a bit hard to call, but Aussie and Kiwi, these two pairs here are moving to the top side, and they are just breaking through daily trend lines as well. So just keep an eye on these. If we can get some sort of weak US numbers or something happening weak in the US or strong in the Aussie or Kiwi, we're going to start to see the next sort of trend in these currencies, and it should be higher, right? Of course, the upcoming US numbers will be the major catalyst going forward, and that's where the data for the rest of the week really comes into play. Right, we've got some more Chinese manufacturing numbers, UK data. Well, it's hard to see that data coming into play with so much Brexit activity. But coming down to the bottom here, the Eurozone CPI flash estimate, we get these US numbers coming out as well. Well, then it's game time. What you need is, this is where trading really lights up. You get direction from the Fed, and then you get a big, hairy US number to follow it, which goes with their thinking. That's when all the cash comes in. So, for instance, if we had really weak US non-farm payrolls or ISM manufacturing data, then you got to expect the dollar's going to get crunched big time, and you're on all these currency pairs. So just start to pay attention to what's going on with the data now, because we do have clear direction. All right, that's our CAD opportunity. I'll probably be adding that to the next best trade as we go forward. And yeah, as I said, I mean, we've been waiting a fair bit of time. It's we've now got the opportunity sort of brewing for us. All right, and that's pretty much where we are, guys. There's not a lot more to do. You can't make these currencies move more than what they are. Let me just come back and just give you a quick look at the, like for instance, the Aussie picture here. Interest rates in Australia. This is what I like about the Aussie trade too. The RBA, okay, stronger. Well, even though it was one of their weighted medium numbers, which I don't really, it makes you feel a little bit weird. But the interest rate picture in Australia is potentially up. We've got a Fed on hold. That looks to the top side. And check out this daily trend line. It's clear as day. It's one of those no-brainers where you can see it really coming into play above sort of where we are here at the moment, above 72, sort of 60. One little push here, and this thing's on the way to sort of 76 cents. Okay, I really like that setup. All right, guys, that's it from me. We'll, just keep an eye on the data, and we'll play it out as we take it. All right, guys, have a good one. We'll see you in the trade zone. Cheerio.